Okay, Matt the Mortgage Guy here with a warning about super low mortgage interest rates. That's my warning signal. A lot of companies in 2020 have learned, and it's got to be working, because if it didn't work, they wouldn't keep doing it, that super low interest rates attract people. It makes them pick up the phone. It makes them look at that flyer that comes in the mailbox. They stop and pause the commercial. Oh my gosh, so-and-so's offering a 30-year fixed at this crazy rate. I'm purposely not going to mention the specific rates, because that's just, as a mortgage broker, not good for compliance reasons. I'll just say that if you see a super low interest rate advertised, yes, it's available. Is it cost effective? Is it the best rate for you to be in? Probably not, but is it available? Yes. So here's how rates work. I'm gonna try to make it as simple as possible. You fill out an application and people always ask me, what's the rate? And I tell them, well, you've got choices. Let's just say, for example's sake, these aren't rates, I'm not advertising anything. I plug in your number, 746 credit score, and you're putting 10% down, and you're buying a house at 300,000, so your loan amount's 270,000. You'll have a choice. You've got 1.99, 2 1/8, 2 1/4, 2 375, 2 1/2, all the way up to 299. You've got that full range. Every eighth in between 199 and 299. You can have any of those rates. People would say, well, give me the 1.99. It comes at a cost. And what happens is, more often than not, that lowest rate comes at such a crazy cost, it's not even close to worthwhile. If you take a rate that's super low and it saves you $110 versus a different rate, but it costs you an extra, let's call it $12,000, how many months do you have to sit in that loan to recoup that $12,000 you spent up front for that rate? Usually not cost effective. So as a consumer, don't ask what the rate is, or don't say, I'm looking for the lowest rate, what can you do? Because then these people on the phone who know that you're just looking for rate go, oh yeah, I got you. I got a 1.875. Beat that. That doesn't mean much if it costs you an arm and a leg and your firstborn. So the most cost-effective rate is what you're looking for. And looking at a rate sheet, a good originator who does this for a living and looks at this stuff all day can say, listen, you've got a couple choices. Here's a rate, here's a rate. The difference between these two is about $23 a month. It's gonna cost you an extra X number of dollars. If you're in this loan for more than 4 years, that might make sense. If you're thinking about you might upgrade it in 3 years, I wouldn't spend that extra money. Those are the conversations you have. It's not just like, what's your lowest rate? Oh, hey, I'm looking for the lowest rate. Oh, hey, I'm looking for the lowest rate. People do that, and trust me, you're not gonna get the best deal. You're gonna get somebody who sells you on a rate, packs in a ton of cost, and then when you refinance that thing in 4 years, or you sell that house in 3 years, you're out. That humongous amount of money you spent up front. All you got in return was to be able to sit around the water cooler and be like, yeah, man, 30-year fixed, 1.875. Psst, I got that. You packed an extra $12,000 in your loan. Was not worth it, trust me. So any questions at all, please feel free to reach out. Matt@mattthemortgageguy.com. Licensed in California, happy to help you. If you're outside of California, the advice is still free. Referring you to a broker in another state that I like and I trust is free. So truly enjoy helping people. If I can help in any way, give me a ring. What was I gonna say? I forgot what went at the end. Some more warning. You've been warned. Don't say I didn't warn you. Thanks for watching.